Hello, welcome back to my channel, Learn Value Investment with Manan Shroff. In today's YouTube video, I get request from a couple of group member for the different stocks, and I thought that this would be a very good opportunity to analyze three different companies in the same sector, and it's going to be quite interesting. So what we are going to talk about today is Intel, Advanced Micro Device, and NVIDIA. All these three companies, especially Intel and Advanced Micro Device, you know that in many computer, their chips going, so they were a major competitor, and NVIDIA is again one level up for GPU and CPU, but Advanced Micro Device also does the same thing. But the interesting thing is that all three companies are traded at a different price level, at a different multiples, and we will look into that. To start, I have already did the one video on NVIDIA. So, but I just want to give you the idea that we start with the NVIDIA. If I go to the NVIDIA, let's see the statistic. This number here is huge. Enterprise value to EBITDA is 40 times. So it is really expensive. NVIDIA is really expensive, but I think there are a lot of reason that it is trading at high multiple. Is it's a dominating position, and also the exposure to artificial intelligence and metaverse, and also the growth. So because if you see the growth here, let me show you the growth for NVIDIA. It is about 22%. Okay. So if you look into the NVIDIA enterprise value to EBITDA is 40. Now, if we go to Advanced Micro Device and we try to look the same thing, enterprise value to EBITDA, all these three companies are in the same sector. Okay. I mean, sometimes what happens that there are semiconductor sector, but the companies doing different things. Some companies making equipment for semiconductor, some companies making chips, some companies making quality assurance instrument for semiconductor industry. But in this case, Advanced Micro Device, Intel, and NVIDIA, all three fall into the same category. And it is interesting the way market is pricing this company. So in NVIDIA's case, enterprise value to EBITDA was 40 times. People wants to pay up to 40 times. And this is even after losing a quite amount of, I think it's after hours also losing something happened, and probably, but enterprise value to EBITDA is very high. And as I said in the previous video for NVIDIA, I have a 10% of my portfolio in NVIDIA. The reason I look for the next 10 years, and I'm hoping that his CEO's vision, I really like it. So I'm taking chance. My NVIDIA price is around $205 average cost. But as I said in my previous video, for companies like NVIDIA, you have to write the covered call, and you have to minimize your exposure. So I'm generating a lot of income from NVIDIA's covered call. So for me, it doesn't hold my money into the bank account, because I keep writing covered call and get a premium, and that reduce my cost. But the NVIDIA definitely is on a higher side. People are expecting too much. If NVIDIA will have another bad quarter, the stock will go down. It can go down big time. But I'm a long-term investor, so I'm not worried about that. Within 10, 15 years, I know that NVIDIA would make a lot of money and justify this valuation. In case of advanced micro device, so if you ask me, should I buy NVIDIA? Yeah, you can buy NVIDIA at this price, but again, we are buying at very high price. The good price to buy NVIDIA is around $70, enterprise value to EBITDA at 20 times, which I don't know it can reach. So what I would do, that I would buy it and then I started to write covered calls. And that is the only way to invest in NVIDIA at this position, at current market price. And anytime if the company is very high, you can do two things. The first thing is, if you are sure about the company, go ahead and buy it and then write covered call. Another thing you can do is, if you think the NVIDIA is too high, and as I said, the good buy would be around $80 or $90. If we just look into the numbers, not quality, just the numbers, enterprise value to EBITDA at 20, 25 times is good, reasonable for these type of companies. So that knocked down the price in half, $75. So you can, other way you can make money is, you can write secure cash put for $80 for NVIDIA for 1 year from now. And you can get a good amount of premium. I mean, I will just give you one, I will just show you the example. For NVIDIA, let's say example is $144. For 100 share, you have to invest, you have to put it on a side if you are doing secure cash put, okay? Let's go to here. I just want to show you, this is also the alternative way to invest. I really use covered call and secure cash put. For me, it's a kind of insurance business. It is the insurance float. That is the premium. From that premium, I'm generating more income. While it's a kind of insurance business where you have to pay at certain point. If NVIDIA started to go up and you don't want to sell your stock, you have to pay the premium. When you pay the premium, you will lose some amount of premium, but I will look this as an insurance business where you have the premium, but then you also have a claims. As long as you are not too much negative in claims, in paying the premium, I will utilize those premium, because not all stocks will keep going up and keep going down. So in NVIDIA, for example, let's say if I believe that $75 is a good price to purchase, right? Then I can go here, rather than buying NVIDIA right now, I select the expiration 1 year from now, one year and 4 months. And what I will look for is I go to the put option and I will write somewhere here, because this is a good price to buy NVIDIA. So in the secure cash put, you can get, but see, like you can see that it's the chances are very slim. The delta is 0.09. I mean, when you have the 0.09 delta, it is very slim chances. It's not going to go that down. If it goes, I mean, you can't say anything about this market. It can go down, but chances are very slim. But usually, let's say even you buy it $120, let's say where is the delta? 50 is here somewhere. Okay, so if you want to buy around delta 30, $135, it would be a good price. You get $2,310 premium on cost of 13,500. So 2310 premium on cost of 13,500, because that 135 multiplied by 100 and $23.10 multiplied by 100. So it's going to be 17% return right over there. Who's giving you 17% return without even investing the money? Because only time 13,500 will be assigned 1 year from now if NVIDIA is trading below 135. Okay, so for me, if I have to do NVIDIA, I go either for secure cash put or I go for covered call after buying the NVIDIA. For advanced micro, let's move to the advanced micro device. Advanced micro device enterprise value to EBITDA is not that bad compared to NVIDIA, which is 40 times, right? Now, I look other things is how's their balance sheet? The balance sheet is good. Total cash is 6 billion. Total debt is 3.2 billion. So they have a net cash, 3 billion. So that side, we are very fine. We are good because they have a very good balance sheet. So I'm not worried about their balance sheet. Profit margin, operating margin also good. You can compare it with NVIDIA. You can see that here is also the difference why people are paying more for NVIDIA is the profit margin is 32%, while NVIDIA has a, advanced micro device profit margin is 14%. So all these things adds up. But again, enterprise value to EBITDA 40 times, it's very high. When we talk about advanced micro device, 25 times enterprise value to EBITDA, I just want to see their growth. And their growth is more than the NVIDIA. The NVIDIA's growth is 22%. This is 26%. Okay, so what we can do is, the best thing is I can pay up to 26 times. And that's going to be fair value, okay? We are not buying at bargain. Okay, that's going to be normal purchase price where I would say fair value lies of advanced micro device. So if I multiply this with next year earning $4.89, so next year earning is $4.89, and then I multiplied it with by 26.79, which is the next 5-year growth. The fair value should be around $131. Okay. So now NVIDIA's fair value, we figure it out $131. If you want to add a little bit margin of safety, you can go down from 26.79 times to 20 times earning. 20 times 489, about $97. Okay, so I'm thinking that the fair value of advanced micro device lies between $97 to $130. Okay, depend how they how they meet their growth expectation, how they meet the 2023 earning estimate. But so how much undervalue is it? If we take the average of $97 range and 131, $114. So advanced micro device at this point should be traded around $114, would be good value to purchase. Not extraordinary bargain, but it's good value to purchase. And it's trading right now for $83 in the after hours. So that will give you margin price of 37%. Okay, so I would say the advanced micro device, you should buy it right now. And if you write covered call on top of this, this would be a very good trade because the whole equation is changed here. If they reach this growth for next 5 years, then and they reach this $4.89 earning for next year, then the advanced micro device is definitely undervalued. I will keep buying it below 97, whatever price. If I have a money, yeah, I keep buying it below 97 and I keep writing the covered call. That should, because both the balance sheet wise also, advanced micro device is doing amazing. They have a net cash 3 billion. So I'm not worried about that part. In this trade, definitely make profit for me within next 5 years. So, okay. From an advanced micro device, someone also asked me about Intel, and I thought it's within this one video, you can also see how the market is appraising different companies in the same sector with a different growth, with a different CEO's vision. So let's look on the Intel Corporation. You will see the big difference in Intel Corporation. Enterprise value to EBITDA is 4.3. Okay, think about this. Enterprise value to EBITDA for advanced micro device was 22. For NVIDIA, it was 40 times. People just for Intel, they don't want to pay more than 4.30. Why they don't want to pay for more than 30? So we can just go here. So they have a good cash, 27 billion cash. Debt is 35 billion. They don't have a net cash balance, but that's not bad. I think here is a book value is very good to $24.65. Intel is around that book value. Okay, so here the Intel would be exceptional buying if you buy near the book value. Okay, $24.65. If that happens, just buy because you are getting company free. Free means that the company, the people are not paying any premium. You are buying for at a book value. And Intel is not like a commodity business. It's a brand business. It just, the balance sheet is very good, 27 billion cash. Let's see why people don't interested to pay more multiples for enterprise value to EBITDA, and what is the good price for buying to buy the Intel. Okay, so you can see here that makes a difference. Okay, when we saw advanced micro device, it was growing at 26%. When we saw NVIDIA, it was growing at 22%. Now, Intel is only growing at 1% for next 5 years. And that changed the whole equation. But any stock, like, and especially like Intel kind of, you can at least pay from 10 to 15 times earning. I mean, they have the good balance sheet and they have the very good they have the very good thing. The only thing that they don't have the growth. Probably sometimes CEO vision also makes a big difference. So at this point, actually, Intel is very good purchase. If you are patient investor, okay, and this is like a value stock. It's really value stock. And what I can do is I can see, let's say, if I play 10 times of next year earning, which is $2.68, the price comes somewhere around $26.80. So what I will do is I think I will buy Intel if I can get it around $26. And that would be absolute, that would be extraordinary purchase, giving the fact that price to book is near to 1.15. Right now, it's also what is the price to book value? There is price to book value should be somewhere. Let's see, analysis. It doesn't show here. They used to show, yeah, price to book. So the price to book is 1.35. So if you compare that with NVIDIA, okay, price to book is 16 times. People are paying 16 times to book value. Advanced micro device. Price to book 2.59, which is good. So that means advanced micro device is a good value, book value, $34, yeah. Okay, so Intel, coming back to the Intel, let's see how much dividend they are doing. Okay, they are paying you $1.46 dividend. So we have to keep that other things in. If you are a value investor, if you like dividend, then this company is for you. The reason, but I mean, I'm saying like if you can buy around $25, that it may go down to that level, looking at the market. But right now it is also trading at 52-week low. Let's see. Yeah, right now it's also trading at 52-week low. So Intel is very good buy for the value investor. It has a 4.43% dividend yield. And another thing I'm just want to make sure, the payout ratio, dividend payout ratio. See, the dividend payout ratio for Intel is only 30%. So what does that mean? That Intel can raise their dividend without any problem. Intel can do a lot of buyback of share because they have the total cash balance 27 billion. This is the kind of stock that Warren Buffett look for, you know, where it has a lot of value investment. It's giving you the dividend payout ratio. Usually, what it means that out of $1 revenue, they are paying out, whatever the $1 net profit, they are paying out 30 cents as a dividend. So, especially for mature companies like Intel, dividend payout ratio should be around 50%. So this dividend should be around, yeah, the dividend is good. But I think, again, the market is looking in the forward. Next year earning market is looking very low, because if you see that 2021 earning was $5.47, then it dropped down to $2.27, and then 2023 is $2.68, and that is another reason why the Intel is down. But again, if you want to purchase Intel, yeah, it's very good stock. You won't go wrong with this. You get a 4.5% dividend yield. You can write covered call. if you can buy around 25, the dividend yield will jump over 5%. And so, but you can see the clear difference between these three companies in the same sector. The growth is a key thing for Wall Street. And sometimes they put, and the hype, another thing is a metaverse hype. Sometimes they put price tag that is very high. NVIDIA is definitely on the high end, but as I said, like if you want to play with NVIDIA, the only way is to buy and write a covered call, because NVIDIA also pay you high premium because it is high volatility stock. Advanced Micro Device will pay you high premium because it's a high volatility stock. Intel will not pay you high premium when you write covered call. If you look for so again, for NVIDIA, you can purchase it current market price. You can do secure cash put, and you can, but you should be ready to write covered call. Otherwise, don't buy NVIDIA. Advanced Micro Device is a good purchase right now. As long as you buy below $97, it is very good purchase. You can write covered call. So, and the Intel, if you can buy around $25, $26, that would be absolute good price to purchase Intel. You can also get 4.45% dividend yield and covered call income. So with that, I will conclude this presentation. I hope you like it. If you haven't subscribed yet, please subscribe to our channel, Value Investment with Manan Shroff. It will help a lot of many more other people. So with that, goodbye, and I will come with a few more videos within a week as time permits. Thank you. Bye.